October's stats have come out. Let's take a look. What went on in the past month? Compare it to previous years, compare it to last month, see what's going on, keep you updated with the market. So, first, what did they say? Inventory levels eased over last month thanks to combined impact of a monthly pullback in new listings and a monthly pickup in sales. With 6,471 units in inventory and 1,885 sales, the October months of supply returned to a 3.5 months after pushing up to almost 4 months in September. So, while both row and apartment style properties continue to report elevated supply levels compared to demand, conditions remain relatively balanced for both detached and semi detached properties. Year to date, sales in the city total 20,082, down nearly 16% compared to last year, but still in line with longer term trends. Much of the decline in sales has been driven by pullbacks from apartment and row style homes. Improved rental supply and easing rents have slowed ownership demand for apartment and row style homes. It is also these segments of the market that have seen October inventories reach a record high for the month, said the chief economist for CREB. Excess supply for apartment and row style properties is weighing on prices in those segments more than any other property type, influencing total residential prices. As of October, the total unadjusted residential benchmark price in Calgary was $568,000, down nearly 1% compared to last month and over 4% lower than last year's levels. The largest price adjustments occurred for row and apartment style properties, where prices have eased by respective 6 and 7% compared to last October. So you can see right here, sales down almost 13% year over year. New listings down 0.9% year over year. And total residential price right there, down that 4.1%. Inventory is up 30% year over year. Months of supply, almost 50% year over year. So 3.43 right there. What I actually find very interesting about everything we're kind of looking at here with the detached, semi-detached, row, and apartment price is still that slight increase on that semi-detached pricing. Still a very attractive purchase for a lot of people. Weighing that pros and cons between either a row, townhouse, apartment, the detached. Semi-detached is remaining strong, so people are still looking for that happy medium. Obviously, it's not a fully detached home, or I would say it, but it's a good in-between and still offering some competitive pricing for people that are kind of looking in that area. So with sales hitting 1,885, which is down that 13% from last year, new listings came up slightly at 3,233, while inventory climbed to 6,471. That is 30% higher than last October. So there's just a lot more on the market right now. It really is like 30% higher. So what's the story here? We're clearly not in a seller's market anymore, but it's not a crash either. The market is normalizing. Buyers are gaining options. Sellers need to adjust their expectations. If you watched my previous video, I talked about that. It 100% needs to happen. So let's look at this by each segment. For the detached market, October sales reached 1,012 units, an improvement over last month, but still have a 5% lower than last year's levels. At the same time, there was 1,500 593 new listings that came on the market, causing the sales to new listing ratio to rise to 64% and inventories trend down over last month to 2,913. Inventory levels remain slightly higher than the long-term trends for the month, but with just under 3 months of supply, conditions remain relatively balanced and far better than conditions reported during the 2015 to 2019 period. Despite relative balanced conditions, there are pockets of the market that are experiencing buyer market conditions, which is impacting prices. Citywide detached benchmark prices eased to 744,400 in October, 1% lower than last year. However, price adjustments ranged from a year-over-year gain to nearly 2% in the city center to a decline of over 5% in the Northeast District. Despite recent adjustments, year-to-date prices remain over 1% higher than last year. So now here's where it's getting interesting. From the spring peak, the biggest price declines have been the Northeast and East District, each down 6%, while the city center is still up slightly. So depending, it is very area dependent. You can see some pockets are still seeing the increases and seeing the demand, and you can definitely see other ones trending the opposite direction. So that tells us buyers on the east side are finding more negotiating with the prices, while the inner city detached properties are holding firm. Overall, detached homes are steady, but momentum is easing. If we're going to look at the semi-detached, sales improved over last month, while new listings slowed, causing the sales to new listing ratios rise 57%, which is slightly lower than typical levels for this time of year, but high enough to prevent any significant change in inventory levels compared to last month. With 186 sales and 613 units in inventory, the months of supply was over 3, higher than last year's extremely low levels, but lower than last month. Most inventory choice was weighed on prices over the past several months. However, with an October benchmark price of $683,100, prices remain nearly 1% higher than last year, and on a year-to-date basis are over 3% higher than last year's. Even with more listings, prices are still up. The benchmark for those semi-detached homes is just about at 1% higher than last year and 3% higher year to date. So despite softening in some segments, this one's held up well. City center duplexes continue to perform best, while outer districts are seeing more balance. For the row homes, with 275 sales in October, year-to-date row sales totaled 3,412 units, a 17% decline over last year. While row sales remain well above long-term trends, new listings have been on the rise and reached record highs so far this year. As of October, there were 1,054 units in inventory, the highest ever reported for the month and nearly 32% higher than long-term averages. This also causes the month's supply to remain around 4 months. The additional supply choice has weighed on prices. The October benchmark price was $431,200, over 1% lower than last month and nearly 6% lower than prices reported last year at this time. The steady slide in row prices have caused year-to-date prices to drop by 1.5%. Price adjustments did vary across the city, with the largest year-to-date declines occurring in the Northeast and North District. So one thing I definitely keep noticing, and we keep repeating, and we keep saying, is North and Northeast districts. So what I said last month, seems to be still a trend this month. It is where we're seeing some of the biggest changes. So the benchmark price for Row sits at that 431,200, down 5.6%. What's new this year is how big the gap has grown between detached and semi-detached and the multifamily side of the market. Row and apartments are seeing record high inventory levels, something we haven't experienced since 2019. When we start to look at the apartment side, the pullback in new listings relative to sales this month did help prevent further gains in inventory levels. However, with 1,891 units in inventory and 412 sales, the month of supply remained elevated at nearly 5 months. Apartment condominiums have experienced buyer market conditions for nearly 6 months, placing downward pressure on prices. As of October, the benchmark price was $318,200, down over 1% compared to last month and nearly 7% lower than last October. On a year-to-date basis, prices are nearly 2% lower than last year's levels. The largest year-to-date price declines occurred in the Northeast and Southeast districts at 4%. As those districts are either reporting the highest months of supply on the resale market or are facing significant competition from the new home market. CREB also noted that the rental supply is improving and rents are easing, which is something new this fall and directly impacting ownership in this demand and category. So if you're an investor or a first-time home buyer, this is where you'll find the biggest and best deals, but also where prices could drift lower if we keep heading this way into the winter months. Now, here's what's different about 2025. The first, balance has returned faster than expected. Typically, the market cools through fall and stays soft through winter. But this year, we saw supply ease slightly from September to October as new listings slowed, while sales held steady. That's an early sign of stabilization we haven't seen since 2019. Second, there's a much bigger split between housing types. Detached and semi-detached homes are steady. Row homes and apartments are facing pressure. That divergence is sharper than in any of the past 5 years. Third, rental dynamic is finally influencing ownership. With more rentals available and some rent prices easing, fewer tenants are jumping into ownership. That's creating a feedback loop of softer apartment demand. And lastly, district performance is diverging. The East and Northeast are showing the largest pullback, while the city center and the West remain resilient. So, what to expect for the rest of 2025 and into 2026? We'll likely see a seasonal dip in new listings through winter, but inventory will remain higher than last year, keeping months of supply near a balanced market. Prices should stay mostly flat or slightly lower into 2026, especially in the row and apartment segments. Detached and semi-detached homes are expected to hold steady unless we see another spike in new listings or rate changes. The bottom line, detached and semi-detached is stable. Row homes and apartments are softening. Buyers have leverage and choice, and sellers need a sharper pricing and strong presentation. In the end, to sum it up, Calgary's market is no longer in a frenzy, and that's a good thing. We've moved into a balanced market, and it's the first time in years. Buyers and sellers are on an equal playing field. If you're thinking about making a move for the end of the year or planning ahead for 2026, this is the time to strategize. Reach out anytime. I'm always happy to help run through the numbers for your specific community and help you find the best move in this changing market. Thank you for watching.